want to buy a home, and let's say this home is $150,000 US, then most people don't have $150,000 saved up in the bank. How are young people buying houses? Well, what they'll do is they'll go to a bank, they'll give the bank a little bit of money, and the bank will give them a mortgage. We're actually going to give you a mortgage, which means we're going to lend the money you don't put up. So let's just say for a moment you put up the typical 3%, 5%, but for easy math today, we'll call it 10%. Let's say you came up with $15,000. Down as in down payment would be the remaining balance of $135,000. So I put $15,000 of a down payment, and there was a $135,000 mortgage. Now that mortgage is going to come with an interest rate because the bank's going to say, we're not giving you our money for free. Let's just assume for this example that your payment is $800. My mortgage is $800, but I might get my renters to pay $1,000 a month. My mortgage payment is $800. My rent payment or my lease is for $1,000 a month. So this is my rent payment, this is my mortgage payment, and the difference is that if you have to pay the bank $800 every month, but your renter gives you $1,000, there's some leftover money. How much? $1,000 minus $800 is $200. What do we call that? That's called cash flow, and cash flow is good. So you buy a property, and let's say all of a sudden that this house, I'm going to throw you a zinger. Now this house is worth $200,000. You bought it for $150,000. You put $15,000 down, you got a mortgage for $135,000, but it's worth $200,000. Here's the question. How much equity does it have? What's equity? The equity is the difference between what it's worth and what you owe. So in this case, $200,000 minus the $135,000 is $65,000 of equity. So I have $65,000 of equity. You might say, but Chris, what about my $15,000 that I put down? That's now part of the equity because you would get this $50,000 out plus the $15,000 you put down. The equity represents the total amount between what it's worth and what's owed. By the way, when you do investment real estate, you're looking for equity and you're looking for cash flow. Cash flow is a really good thing.